Hello, everyone. My name is Jason Ewas, and I'm joined today by Ariel Miller. Thank you for attending today's webinar, 5 Things to Know About Autosave for Employers. Today's webinar is hosted by Commonwealth in partnership with BlackRock's Emergency Savings Initiative. We're going to start in a few minutes to make sure everybody can get in, and I'll be back in a minute. And hello again, everyone. We're going to do this a few times. We're going to officially launch the webinar in a few minutes to make sure that everybody has time to join. But if you've just joined, you're listening to 5 Things to Know About Autosave for Employers. Again, while we give people another minute or two to join us, we're going to encourage you to complete the poll questions that you're going to see on your screen shortly. By answering these questions, you're helping us understand who's here today, which will help us shape our responses later in the webinar and through follow-up. So the first question is, what's your industry/role? You can see the answers there: employer, plan sponsor, fintech, bank, credit union, and others. So if you just take a minute and fill that out, that would be very helpful. And once we have enough results, we will share the results in real time. There we go. And if you said other, it would be helpful for us if you entered what that other is in the chat that you can see probably on the right-hand side of your screen in the chat box. It looks like, so there's a lot of other. We've got some fintechs, and banks, and credit unions. So welcome, everyone. And then while we're giving another minute, we've got a second question. So are you currently offering an emergency savings solution to your employees? So this doesn't mean Autosave in particular. This could be anything that you define as being for short-term savings, emergency savings. And again, in just a few seconds, we will post the real-time results on the screen. All right, we've got a solid mix here. So 39% are currently offering, 13% have it on the roadmap, 13% don't but are considering it, and 34% have no plans at this time. So it's great for us to know as we formulate answers to questions, and again as we develop follow-up to the webinar. All right, everybody. So thanks for bearing with us there as everyone joined the meeting, and welcome again. We're going to officially kick off the webinar. If you've just arrived, you've joined 5 Things to Know About Autosave for Employers. My name is Jason Ewas, and I am the Senior Policy Manager at Commonwealth. For those who aren't familiar with us, Commonwealth is a national nonprofit building financial security and opportunity for financially vulnerable people. We do that through innovation and partnerships in really real-world solutions. Commonwealth is a partner in BlackRock's Emergency Savings Initiative, which is a $50 million philanthropic commitment to increase access to frictionless savings for LMI households. And for those who are interested in learning more about BlackRock's Emergency Savings Initiative, you can go to savingsproject.org. We'll have that contact information at the end as well. Great, so as many of you may know, we're here today to talk about emergency savings and in particular the critical role that employers can play in driving it. Even before the pandemic, we all had a good sense of the scope of the savings situation in our country. right? The frequently cited statistics about how close to half of Americans and the majority of low to moderate income Americans would have trouble finding $400 in a crisis. For many, obviously, the pandemic has caused their financial situation and their lives to become even more precarious, with spiking unemployment and a variety of other factors. So at this moment in particular, employers can play a vital role in advancing employee financial security. In a recent Commonwealth study, lower income employees reported that employer interventions, such as savings tools, at the time of a raise would reduce stress, enhance productivity, and increase the likelihood they stay with the company. Employees trust their employers, and even before the pandemic, thought employers had an important role to play. So in this webinar, you will learn key information about a new opportunity for employers to develop and implement what we call Autosave for Emergencies. Driven by Commonwealth, the Consumer Financial Protection Bureau, or CFPB for short, recently issued policy guidance that creates a pathway for employers in partnership with financial service providers to develop a first-of-its-kind opt-out workplace savings program. Autosave, in other words, takes a proven solution rooted in behavioral science and puts it into practice to drive emergency savings for those who need it most. So, as I said, we're going to provide an overview of this opportunity. Our goal, just to be clear, is for our listeners to leave understanding what Autosave is, in particular Autosave for Emergencies, how employers can pursue it, and how others interested in opportunities around it can work with us or move forward, and next steps for those who think they would like to explore the opportunity further. And now, as I mentioned, I'm joined by Ariel Miller, who is the Emergency Savings Project Lead on the Social Impact team at BlackRock, and I'll let her introduce herself.
Awesome. Thank you, Jason. Hi, everybody. I'm so thrilled to be joining you all today on behalf of BlackRock's Emergency Savings Initiative. It's been a pleasure partnering with Jason and the rest of the Commonwealth team, as well as Financial Health Network and Common Sense Lab over the past few years. We're really excited about the potential impact of this new policy guidance that we'll be discussing today. And without further ado, we can't wait to dive in and hear from all of you about your interest in the topic as well.
Great, thank you so much, Ariel. And right before we do that, we've got just a few small housekeeping points. We want to make sure we have everything in order. So we'll address those and then we'll dive right into the conversation. So how to ask questions. So I mentioned this earlier, but it's shown visually on your screen right now. There's a questions box that you can see, and you can submit your text questions and comments using that questions panel. So throughout, if you have questions, comments, would like more information about something, just put it in there and we'll either get to it at the end of the webinar, or we'll follow up afterwards to make sure that we're addressing all of your questions, concerns, and other comments. Great, and with that, with as many of logistics as we could think of out of the way, Ariel, I'm sure you're ready to guide the discussion. I've got plenty of questions for me, so take it away.
Awesome, thanks, Jason. So we're gonna have plenty of time today to talk about the path to Autosave, but I thought to start, we should get literally on the same page and make sure we're operating with the same definitions. So let's just talk vocabulary for a minute. What does Autosave mean when we say it? And we'll say it many times over the course of the next hour or so.
Yeah, it's a great place to start. And so we at Commonwealth and in this project are defining Autosave in the context of emergency savings. So we'll refer to it as Autosave for Emergencies, and it's for employers to implement. And specifically, we're talking about when an employer automatically enrolls an employee into making automatic contributions into an emergency savings account the employer chooses. Also of note, an employee can choose their own savings account or opt out of the program at any time. In other words, this makes savings automatic. And so that was a lot of words, and we'll define this sort of throughout the next 50 minutes in a variety of ways, but just framed one other way. Autosave for emergencies, and when I say autosave from now on, that's what I mean specifically is Autosave for Emergencies. opens the possibility for employers to split an employee's pay automatically, with a certain amount going into a savings account each month. The employee then needs to take action to opt out, to not participate. So think opt out is a key word, that it makes savings the default option. And this one component, we'll get more into this later, is similar to the defaults in retirement, but that's the definition we're working from today.
Perfect, that's helpful. So we're going to go through the rest of the conversation with that opt-out keyword in mind. So making consistent automatic contributions to emergency savings the default seems to be in line with a lot of what we hear behavioral economists and social scientists talk about, which is taking the friction out of the process. But one thing that's on my mind is if we've never done this before, it's as we advertised in the webinar, a first of its kind offering. Is there an evidence base here? How do we know that this is going to work, or why do we have conviction that it will work?
Right, so from our perspective, that's the key question. Right, so Commonwealth organization, the BlackRock's Emergency Savings Initiative, employers, organizations that we've encountered of all kinds are rightfully asking this question: what works, and what can we do right now, given the savings crisis, given the economic state of so many families in the country? We'll start by saying that some employers already offer opt-in emergency savings options, so start with what exists, but so far from what we've seen have relatively low take-up. So split deposit in its existing form is an effective tool, but we think that the automatic part will make it more effective. And so another way to put that is the friction of having to opt in to split deposit and sometimes make a variety of other decisions like open a bank account, or determine what percentage of the pay to allocate towards that savings account, reduces take-up rates. And as you referenced, we want to reduce friction as much as possible. And directly to your point, we don't have much data on this particular intervention. It's first of its kind. What we do have is plenty of research on automatic saving in retirement. So in short, it dramatically increases participation rates in retirement accounts. A recent study, one of many that shows similar findings, found that retirement plans that used auto-enrollment had nearly double the participation rates as plans that used opt-in. So 86% for auto-enrollment opt-out plans and 44% for opt-in. So if you look at a variety of studies, they'll show at least pretty similar statistics, just dramatic up increase. And what we're starting to see more of is that low to moderate income folks benefit most from auto-enrollment. Without and pardon the obvious behavioral science word here, nudge, LMI may not save it all without that auto-enrollment. It just makes savings easier for those who benefit from it most. And just to drive that point home, a variety of other studies, meta-analyses show that same thing. There are, of course, nuance and caveats, particularly around auto-escalation and other best practices when designing a program, but the numbers speak for themselves. Automatic saving drives participation in retirement accounts. We think it will help employees build emergency savings as well.
That makes sense, and in particular resonates for me because at BlackRock we often think and speak to our colleagues about lessons learned or infrastructure that already exists in the retirement space that we think might be able to be leveraged to improve short-term financial stability. So this is a great example. But if there is this evidence base for opt-out, it makes me think then no one's tried it because the barrier to entry is pretty high. So take me through what some of the barriers are to exploring this, and why is now the time to innovate and explore?
Yeah, let's talk regulatory barriers. So the short answer is that employers didn't try this before, this specific thing before, because there was significant regulatory uncertainty around implementing such a program. Specifically, there was regulatory uncertainty around Regulation E, which implements the Electronic Funds Transfer Act. And just as a very brief summary there, the Electronic Funds Transfer Act establishes the basic rights, liabilities, and responsibilities of consumers who use electronic fund transfer and the financial institutions or other persons that offer those services. So it was not clear whether under Regulation E, an employer could create an Autosave account for an employee at a designated institution. The key thing was about what constituted employee choice, right? Did a default with with a reasonable amount of time to enroll, with clear disclosures. Did that constitute employee choice? Did that align with Regulation E? And so that's where our work with the CFPB comes in. So a few months ago, I suspect that's why many of our listeners are here, the CFPB approved Commonwealth's application for a CAST template. The CAST stands for Compliance Assistance Statement of Terms template. We'll stick with the CAST template. It's a part of the CFPB's Compliance Assistance Sandbox program, but the CAST template is what we need for today. So the CAST template does a few things, including outlining what a consumer-centric autosave program could and should look like. But the main thing that it does, the reason why we did it, is that it issues policy guidance on Regulation E, right? That regulation that previously created uncertainty as to whether employers could develop an opt-out autosave program. Another way to think about this, and this will become clearer as we talk more, but the Commonwealth's CAST template creates a path to autosave, which is also the name of our landing page. A clear pathway for employers to develop an autosave program that complies with Regulation E, and they can do that by submitting a CAST application to the CFPB, and then receive approval for that and put that into practice. And so that's a lot of stuff, and the CFPB's program is a new one, so we'll explain exactly what that is and how to do that. But there was this regulatory barrier. We put in the work to create this pathway for employers to implement this really first of its kind solution for employees in emergency savings.
And Jason, just as we suspected, we started talking Reg E and the questions in the chat got crazy. So I just want to assure everyone, we see your questions coming in. We dedicated some time at the end to address them, and thank you for your engagement and participation. I suspect we're about to dive into some of these very questions. So Jason, can you maybe give us a little more clarity on who can leverage the template? I hear you continue to say and reference an employer. Does that mean any W-2 employer or qualified plan participant can use this? And yeah, can you please walk us through that?
Exactly. So the CAST template is a template for employers. In this case, it's for employers to apply for approval from the CFPB to implement an autosave program. So you'll see that if folks are looking at their screen, the template builds a foundation is another way to think of it, so that employers can design an emergency savings program, an autosave program, fill in the application using the template, the foundation that Commonwealth built, making it easier for them to fill it out since we've cleared a lot of the questions and done a lot of the work. And they can submit an application to the CFPB. Basically, in the CFPB, if the CFPB approves it, that's affirming that the program, as it's written, will comply with Regulation E. So to get right back to your question, any employer can build a proposal for a CAST application using the CAST template. When an employer submits a CAST application, that application, as I mentioned, will describe how an employer's specific autosave program will work in detail and meet the basic requirements the CFPB has laid out. Again, the major one being complying with Regulation E.
That's great. So it sounds like this is very much an opportunity for an innovative employer to come forward and raise their hand and drive. But one thing you and I have learned through BlackRock's Emergency Savings Initiative is almost no one employer can build and implement a workplace emergency savings solution alone. So I have a hunch that partnerships will be fundamentally important to this work, whether that's partnering with a payroll provider, a traditional financial institution, potentially a challenger bank or fintech. Can you give us a sense of what partnerships an employer who's considering this opportunity should have in place before exploring further?
Yeah, absolutely. That's a great question. Partnerships will be absolutely critical to this work. So I know we said autosave a lot. We said frictionless a lot. Partnerships are critical. Financial institutions have a tremendous role to play in making the process of Autosave for emergencies a reality. Fintechs can design solutions, payroll providers as well can work with employers, can spread the word to employers. In short, sort of all around, the CAS template opens the door for innovation. Financial institutions can design consumer-centric, equitable processes that make Autosave as easy as possible. One of the principles that we focused on while developing the CAS template was flexibility. The CAS, nobody had ever submitted a CAS template or application before, certainly not for Autosave for emergencies. We thought that the Autosave for emergency idea holds tremendous promise, and we wanted to make sure that we enabled innovation from partners. So the application does have some key features that, again, will if approved, will ensure that the program aligns with Regulation E, and there are other features in it as well, all organized around the principle of making sure that the program is moving towards the ultimate goal, which is driving savings for employees. But again, flexibility in design and in partnerships was a critical component of what we did and what we aim to do. So see this as an opportunity for everybody to explore, and we want employers to be able to make this work for them and their employees. So again, which is why we made it as flexible as possible. But other organizations can and should engage at every part of the process.
Awesome. And at the risk of really underlining this point for a final time, I just want to make sure everyone, the colleagues on the line know, especially those financial institutions, that if you have an idea for an emergency savings product that would meet the criteria of the template, you should reach out to Jason and the folks at Commonwealth, and we'll share a little bit later contact information to make sure you can do that. So Jason, we've covered a lot of ground so far. We learned what Autosave for emergencies is at a high level. We learned why it's a promising intervention to increase savings, taking a page out of our retirement colleagues book. And we learned that employers can submit a CAS template, but other relevant organizations, such as financial institutions, have a vital role to play here as well. So now let's get a bit tactical. I'd like to walk folks through what this would look like in practice. Where should an employer or organization start?
Yeah, great question. So far we've talked about what the CAS template is and how that relates to a CAS application that employers can submit. I think exactly as you said, the best way to talk about where you start is to talk about what's in the application and how the program is designed, the sort of the guardrails that exist within it. So we'll put a graphic up on the screen and quickly run through the sort of key features of the program. Caveat is that the best way to get all of the features is to read the CAS template, which is on the CFPB's website. This is a shortened version that's intended to convey sort of the key points that employers, financial institutions, organizations working on this should keep top of mind. So to the question, what requirements does the CAS template define for an Autosave program? So we broke it down to 3 steps. So in this model that we have here on the screen, an employer has decided to move forward with it, right? And so the first thing that they have to do is employer must notify eligible employees of the Autosave program. So to get to that point, employer selects a default out-of-plan emergency savings account. So you have to have the account ready to go if the employee does not opt out or doesn't choose their own account. The account will be owned by the employee is another one. The employer provides clear disclosures, including fees with the account, any other costs of the account, the default contribution rate. We give an example, 3% there. Again, towards the goal of flexibility and innovation, there's not a single number that you have to do. You can sort of play around with what's reasonable given the goal of accumulating some substantial level of emergency liquid savings. And then the employee has to be able to opt out at any time and has to be aware that they can opt out at any time. That's really, that comes through very clearly in the application as well. So that's the first one, is the employer. So once you have it, you have to notify them, the employee. Really, the second step, once it's up and running, is the employee must take one of the following actions at least 14 days after initial notification. So it could be more, but in the application, that was the minimum amount of days that would need to pass. And so one of three things has to happen. So one, in our model, the employee designates a savings account at an institution of their choice. So this is using the functionality that many employers have with split deposit. So in this example, an employee says, yeah, I really like the idea of splitting a part of my paycheck towards savings. I even like the percentage that the employer said I should set aside, but thanks, I have my own account and I like it, I'll put that in. So that's one feature and a part of sort of consumer choice and a consumer-centric model. And again, that can be done using the functionality that exists for many employers with split deposit. Option two, and this is why we need to do the whole the CAS template. Option two is the employee does not respond and the employer opens a new savings account for the employee and sets up automatic contributions. So this is the real innovation of the program. This is where some of the previous regulatory concerns were. We'll talk about additional ones for those of you who are, I'm sure there are a few questions. We'll get to those as best we can. But this, yeah, that option two is the default. The opt-out is the making savings automatic, which by according to most or all research that's been done on it, improves outcomes and driving savings there. And then option three is the employee opts out of the program. And again, to emphasize that they have to have the option to, and they have to know they have to have the option to, right? So that means there's a clear disclosure that it's fairly easy to opt out at any point. So those are the sort of the three main choices that an employee has. For the purposes of the CAS application, the employer could submit the application using Commonwealth's template, and then all the details will be worked out with the CFPB. So it would be futile for me to try to go into what exactly this would look like, but there has to be some data shared with the CFPB, any disclosures about changes to the program, and basically, again, like their main concern is compliance with Regulation E, and that the program is really working towards the ultimate goal, as Commonwealth described in its CAS template, which is increased savings for LMI folks, and not hitting any other points. So not savings at the risk in a trade-off for debt or something, that people are accumulating savings, using those savings for emergencies, etc.
Great, thank you. And I see we're getting a few questions about the slide, so I just want to remind everyone this session will be recording, and we can distribute the recording, which of course will include the slides, to everyone who's registered shortly after this. So you'll get your very own copy of Jason's slides. Jason, I want to go back to one really important point here, which is that if approved, the CAS application with the CFPB doesn't clarify all regulatory questions. Is that correct? And can you take us through some of these outstanding questions?
Yeah, absolutely. So there are additional regulatory considerations. This one, the CFPB is responsible for implementing Regulation E, so that is their concern with this one. And again, as I said, there are other parameters set up for the program and making it consumer centric. That said, there are additional regulatory considerations. Specifically, the two categories that we've identified as being the most prevalent and needed for exploration are federal know your customer laws, have to be accounted for in this. And just as a summary, these laws require identity verification in order to limit fraud and prevent money laundering. So it's basically about identity verification. How it factors in will depend on the design of the program, the relationship between the employer and the financial institution that they're working with, and a variety of other factors. But this, and our understanding is that in most cases, this regulation, that you could design an Autosave program that complies with know your customer laws. But again, a lot depends on specific context there. But just wanted to flag that as something that most instances of this will have to consider. The second one is that in some places, state payroll laws, anti-wage garnishment laws will be a factor as well. So these are laws that set the rules for how employees receive pay. Some state wage laws have more or less are in line with Regulation E. So the CFPB has a group of states that again are more or less in line. Others have different requirements that may be more stringent. And again, so there are 50 states, so this would be another futile task for the next 30 minutes to review, and I'm not the right person to review comprehensively what the rules are in each state. But this is something to keep in mind, to explore and consider. And so far, one, it depends a lot on the design of the program, and a program could be designed in all likelihood to comply with these, but it depends on the particular place and features of the program. So those are the two major ones that we've identified that we're continuing to explore with legal support to understand some of the nuances, and that could be worked through in an individual case with an employer, with financial institutions who are committed to working through these problems. Because as I said, it's a new program, it's a new process for the CFPB. So this is really innovative stuff, and someone would need to commit to working through these issues that we think could be worked through.
And Jason, just to underscore, it sounds like you think these issues are overcomable.
That's what we have learned so far. I think again the caveat is that a lot depends on the design of the program and where it occurs. So much is context specific, but based on our understanding that in many cases, yes, they would be overcomable, that there are ways to design the program that comply with them, and that it's definitely worth exploring in most cases.
That's great. Thank you. Okay, so we are on the fifth and final thing to know, and this is a simple one. How can employers, financial institutions, and other organizations learn more about starting this process?
So they've attended the webinar, which is a great start. So thank you all for doing that. This won't be a surprise. They can reach out to us at Commonwealth. You will see shortly the contact information on your screen. There it is. That's me, and that's my email. Reach out to us, and you'll be able to learn more about BlackRock's Emergency Savings Initiative. But just to summarize sort of what Commonwealth's goal here is, we're looking to engage with organizations that are serious about exploring a CAST application and who have employees that may be struggling with emergency savings, which the data suggests is many, many employers. We know that the CAST application, being new in a variety of ways, will be a process for everyone. So it's not like we're expecting firm commitments to submit a CAST application right off the bat in order to have a conversation. We want to see this happen. If you heard this conversation today and thought, I think my company may be a good fit for this, but I need to ask more questions to make sure. Right? I heard the chat blew up when we started talking about Regulation E. But if the concept sounds right to you, with the regulations it seems doable to you, and you want to make sure, reach out to us. Or if you're in an instance where my organization, my company, my fintech, my financial institution, my credit union could develop a tool to make this easier for employers, but I need to ask more questions. I need to figure out, given that the application is for employers, how exactly this might work. Reach out to us. I think we having done the CAST template and worked with the CFPB, we have a good understanding of how it will work. But this is, like I know I've said this a few times, but this is new in so many ways, right? So I will say that we want to see this happen. The CFPB approved it, which indicates that they want to see it happen. So there's a willingness to move forward, explore these options, and again, innovate and be flexible with this as it moves forward. So in short, reach out to us. We'll be more than happy to work with you to figure out if Autosave for Emergencies is a good fit. So don't hesitate to.
Thank you. And so let's say the employer does reach out to you and does its due diligence and decides they want to lead the way and create this Autosave program. Can Commonwealth support them in actually moving forward with the application process? I mean, I know the template is one part, but can you take a minute to talk about Commonwealth's role or potential role in an application process?
Yeah, absolutely. So we have the capability to support employers in the application process, in the design and implementation of the program. We wanted to make sure today to give a high-level overview of what this was and why it might be compelling, and some of the key features and key areas to understand. We're prepared to support an employer through the application process, particularly those that have employees that are struggling with emergency savings or that might be financially vulnerable, right? So as a part of BlackRock's Emergency Savings Initiative, as a part of Commonwealth's broader goals, that is really our focus. But with those criteria that we think we have the experience with the CAS template, and as a part of the Emergency Savings Initiative, to design a program, submit the CAST application, since we've been through a version of that, and implement the program. I will add that it's working with Commonwealth is not a requirement to submit an application. So you can, if someone is listening today and thinks, this is a great idea, I want to explore this, but I want to keep it in-house and do that on my own for now, they can. But we're here and we have the experience and are happy to work through anything that comes up. Again, for now, I'll just again encourage anyone who is interested to reach out and start the discussion. And ultimately, our goal is to see a solution move forward that supports savings and works well for the employer as well. We think this is a win-win opportunity in a moment where we all need chances like that.
Awesome. So we do want to get to the many questions submitted by the audience, which we appreciate. But first, we actually have another poll question for everybody. And I do just want to caveat, we won't be sharing the answers of this poll, so please be honest. The question is, how likely are you to reach out and or pursue the CAS template? Please select one: guaranteed, very likely, possibly, probably not, or after listening today, maybe just not a good fit. We'll give everybody a minute. This will be very helpful feedback for us to take forward. Again, it won't be shared. Great. Okay, so without further ado, I'm going to kick it over to questions from you all in the audience. So the first question, Jason, comes from Nate G, who asks, what barriers remain to emergency savings becoming standard at all employers?
Yeah, that's a great
question.
That's a really important question. I think that there are the additional regulatory considerations that I mentioned that need to be worked through, and the first step is an employer submitting a successful CAST application, putting this into practice, and seeing that it works, right? And it working means that employees, particularly financially vulnerable employees, are saving for emergencies, using those savings to during shocks, to prevent the use of debt, and to eventually build towards increased longer-term savings and things like retirement, right? So the first step is the CAST application. So I hope many of you responded guaranteed to the last question. The other, and building on that point, I think we need to see more broadly how this works in practice for the is another way of framing what I said before, but for the operational questions that remain, for some of the lingering regulatory questions that remain, and for the practical outcome questions that remain. We think this is a really promising idea, that it's compelling. At the same, we want to see it in practice, and we need some employer partners to take the lead in doing that. So I think getting a few to take that first step and put this into practice is really the critical first step.
That's great, thank you. And so here's another interesting one, and one I know that we've talked about and thought about a lot between our two organizations. This one is from Sharon B, and it is, how is an Autosave campaign different and or better than employees opening their own savings account and setting that up for direct deposit? What are the advantages of the ESA, in this case, program actually being company sponsored?
Got it. Yeah. So great question. Split deposit. So whether it's an employee doing that, that's what I did personally for a long time. Was but once the money came through a single in a single payment, and I auto distributed a small percentage into a savings account. So that that is one of several existing effective solutions. So I want to say that also for employers who have the split deposit functionality, who can enable employees to allocate a certain percentage of their pay into one account and a percentage into another account, or as many, some have 3, 4, 5, 6, 7 accounts that people can split into. That's an effective tool as well that operates it is opt-in. Those are opt-in examples. So they are clearly permissible within existing regulations and law, and are solid tools. What we like so much about Autosave and why we think it holds so much potential is that it takes what we've learned, as I mentioned, from retirement, but in a variety of other spheres, about behavioral science and making things as frictionless as possible, is the way that we framed it earlier. So what's different about Autosave is that it defaults people into that option, which surveys from organizations like AARP, a variety of others, show that people like and want this type of program. In theory, it just doesn't quite exist yet. So people want this. So making it the default makes it much, 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 much more likely than they'll do it, as opposed to the other examples where there are 1, 2, or multiple steps in order to get to that split. So this makes the split automatic. I will add here that one of the key questions here is about what constitutes choice. And what I like about our application with the CFPB, there are several things that I do, but one thing in particular is that it really defines a consumer-centric model, so that it is genuinely a choice, so that the disclosures are clear, that an employee can opt out any time, that they have access to their funds at any time, making this, particularly since the people we're trying to reach and who we think and might benefit most from this are financially vulnerable folks, that liquidity, that accessibility is absolutely critical. And we think with this application, we've set up a structure that enables employers to do that while defaulting people into what we think is the choice, what they've indicated is a choice that they want anyways, but might never get around to making.
Great. And just as a follow-up about the actual savings vehicle, this one is from Jeffrey F. He wants to know, are there restrictions around what that can be? Does it have to be a savings account versus an account with a broker-dealer, money market versus interest-bearing, FDIC protection, etc.? So what's the best way to think about that?
Yeah, that's a great question. So we'll go back to, I'm saying a few words a lot here, but that's usually an okay thing. To flexibility in the application. So what the CAS template says is that that the account has to be consistent with the goals of the program. That is, people saving money, right? People knowing that it exists, and it being used for emergencies. So we use the word specifically emergencies, which means that it has to be liquid. Also accompanying that is that the fees should be low. and all of the costs around it should be reasonable if there are any real costs, right? So there is flexibility. I think in particular cases you could work it out. The sort of and ultimately, like, you know, a quick conversation with the CFPB would tell you if something was on the right or wrong track. But the gut check is basically, does it meet does the account align with the broader goals of the program, which is emergency savings, right? Which means immediate or very close to immediate access to those funds and reasonable rates.
Great. And I know this is a question that has come up for us within the initiative before. And this one's from Kristen H., which is, for multi-state employers, how should they think about this? Can they start with just one state where maybe the payroll laws are slightly more relaxed? And I know this goes back to your comment that there are 50 states. So kind of what's your best guidance going forward?
The first one is we love to talk through the scenarios. So feel free to reach out. You know, there are, back to one of the key talking points, there's flexibility in this. So in terms of what the best, I think the first thing would be to define what the program is, right? So to think through what would work for you as an employer, operationally for your employees, like what does the program look like in practice, and mapping that out. You know, that exercise might take a little bit of time, but I don't think that much. I think then taking that, you can sort of, I think relatively quickly, and potentially we could partner with employers in doing this, map to what states they're in and see if there's like a major problem or not, right? And figure out a scenario from there. So in short, it's you know, it will depend on the design of the program and the states. That said, we want to see this done, frankly, as much as possible. So like we're committed to working through, as long as it hits our key goals of reaching and benefiting financially vulnerable people at a reasonable scale, and then we're willing to support and work through and figure out what options make the most sense. But you know, they unfortunately, I don't have a ready-made answer at this point without all of the details.
That makes good sense. So one more question I want to make sure we get in here, another one that we hear often from employer partners in the initiative, which is this question about how much should someone save? And in this case, because the employer is determining a default rate, how should they think about that? And what's the recommendation you, I think, alluded to a little bit earlier in the session?
Yeah, that's a great question. So before I get in, so there is no specific percentage that we have ready to go that's ready for everyone. So you know, I wish I did, but we don't, because again, everything is context specific. I will say that, so I'll talk about other examples of similar programs that had a lot of what we were talking about, but without that opt-out component. So before coming to Commonwealth 7 or 8 months ago, time has lost most meaning here, but I was a director of the Economic Mobility Lab at the City of Boston, where we partnered with Commonwealth to implement an emergency savings pilot at the City of Boston, right, for employees in 2 departments. A part of what we did there was suggest different savings amounts so the employees were mostly low to moderate income. In fact, almost all of them were in one of the departments. So we suggested goals for $1,000, $2,000 of savings, which as a percentage of their income was quite a bit. So that was one way to think about it, was to set a goal like that. You know, but really I think it will depend on like a specific dollar amount. But really I think it will depend on the specific employees, where they live. If we're talking concrete numbers, we put 3% in the slide as an example, and that's an example. You know, we've heard 3 to 4 to 5% is kind of the range that the discussion has taken place in. Doesn't mean that those are the right answers or the only answers, but 3 to 5%. And I can imagine, you know, when comparing to other benefits that the employer offers or other programs, or again, how much money people are taking home, that number could shift. But if people are looking for some guideposts, around 3 to 5% is the number, but that's not like the only numbers that can be considered.
Okay, so lots of context specific here, which is great. This one is interesting, and I'm not sure if you've thought about it, but Tony H has a great question. He wants to know, can this be in the form of an HSA account in case of medical emergencies?
That is not an avenue that we have directly explored. So the other one I didn't have a definitive answer, and I gave some guideposts. This one I don't really have any guideposts to give. We have looked at, we are like actively exploring auto-enrollment and HSAs, and just more broadly looking into HSAs and understanding the parallels between what this program lines up and what HSAs do. We think that there are a lot of parallels, frankly. So that seems like a question that's worth exploring, but is not the focus of our work in the CAS of this specific application. But it could be possible. Within the CAS template application, we really focus on emergencies and liquid funds that can be used for anything. So that is the focus, is basically no restrictions, very little fees. So the focus was not on products designed for specific needs like HSAs, but strikes me that would be something that someone could explore on their own, and we'd be happy to learn the results, and we'll share any with anyone as we find them.
Great. I think we have time for one more question, and I'm glad we're getting to this because I see there's a few credit unions joining us today who are great partners for this type of initiative. So the question is actually that from Teresa G. How can credit unions bring this program to employer groups that they seek to serve?
Yeah, that's a great question. So we've had several financial institutions already reach out to learn about what processes could be put in place to make this easier for employers. Specifically some fintechs, but sort of across the financial services spectrum, folks have shown interest. So I think one is to sort of dive in and figure out operationally what this would mean to partner with an employer and develop this program. With the additional regulatory considerations with know your customer laws, that's something that if a financial institution or credit union could figure out, if they had a model for the program and said, yep, if we do it this way, we are very confident that this will align with KYC, that would make it easier for employers, right? So the extent that financial institutions are interested in this opportunity for a variety of reasons, developing tools, processes, and or products that align with this is of value. So like I said, folks have reached out to us, and we've had several conversations. So we're at this stage, we're happy to do that if people are interested in figuring out how they may plug in. And as I mentioned, this is one of my talking points here. This is new for everyone, so we're happy to talk through whatever way that you might be able to support. We'll help figure that out.
Great, thank you. And thank you to everyone for your participation and great questions. Jason, this was super helpful. I learned a lot. And I would just like to leave everyone one parting thought, if that's okay, hitting on some of Jason's keywords throughout the presentation, which is that, Autosave for Emergencies is a unique and compelling opportunity for innovative organizations to drive emergency savings forward. And I think now is a really unique time to act, both in the world and because of this policy guidance and milestones. So if you're interested, as Jason mentioned, please reach out to further explore this opt-out automatic enrollment program. And you can visit buildcommonwealth.org/autosave to learn more about how specifically Jason and team at Commonwealth can support you in driving progress forward. Thank you, and I hope everyone has a great rest of their day.
Thanks, everyone.